Okay, ladies and gentlemen, welcome to MacroAce with your host, Tony, also the head financial analyst at FinancialJuice. So, ECB, somebody fight DD said 50 basis points? Hyperhydra said 1000 said no idea. So let's go through what I'm going to do is go through what the ECB rate is, where is the economy at the moment, sentiment surrounding it, and what to kind of expect, and how the deviations, what were the deviations last time, and how big was the market reaction, why was the market reaction as such. So the ECB, what is the deposit rate? First of all, we've got to understand it's the deposit rate that first interest rate paid by the ECB to banks for having a deposit. So excess reserves that commercial banks have, they can park it at the ECB, and then the ECB will give them a rate of will give them interest for that. So a form of payment. Say, hey, thank you for putting your money with us. Here's some extra money for doing that. So it provides liquidity both for the commercial bank and also the ECB in return for that. The ECB, as said, usually the interest rate is 100 basis points or about 1% below the main refinancing rate, which establishes a floor in interest rate. Since no bank would want to lend money out less than what it can earn at the deposit facility. Where is the economy at the moment? So inflation down at 6.1% compared to 7%. So a nice decline there for inflation. Remember, we've only seen the prelim data. We're yet to get the final data, but usually more than often, you don't really see too much of a revision to the final figures for inflation. Core CPI was at 5.3% compared to 5.6%. S&P manufacturing PMI, regional gauge of how well the manufacturing sector is doing in the Eurozone, was at 44.8 compared to 45.8. Services PMI was at 55.1 compared to 56.2. Consumer confidence was at minus 17.4 compared to minus 17.5, and the economic sentiment of 99.7 compared to 99.9. German IFO business climate index, again a key gauge of how the German economy is doing and how do businesses feel about their expectations for the future. Of course, Germany being the largest economy within the EU and also Europe as well. It's quite key for us to understand where is Germany at the moment with their data. Is it strong? Is it weak? Because more often than not, the ECB bases a lot of their decisions on what Germany might be doing, and then of course see how well Germany is doing compared to other EU nations that might be faltering. So again, it's quite key to see what Germany is doing. So their business climate was lower at 88.6 compared to 92.2. The ZU economic sentiment of minus 8.5 compared to minus 10.7. And German inflation was at 6.1% compared to the prior of 7.2%. And the HICP measuring what is inflation like against other European EU nations was at 6.3% compared to 7.6%. Then the previous ECB meeting on May 4th. So ECB future decisions will ensure that policy rates will be brought to levels sufficiently restrictive. So basically saying they're going to get rates to where they want it to be as restrictive as they can to get inflation back to 2%, and then stay and then remain on hold for as long as it's needed. So similar to what more or less the same with what other central banks have said, what we've seen in the past, where that would be their goal to get to a restrictive level and then hold. It's nothing out of the blue or new, but more or less you can see that a lot of what was said before was repeated rhetoric. Nothing new or major came out, and hence the market reaction itself when it did happen, when the rate did come as expected, but there wasn't anything surprising in the monetary policy statement, then there wasn't anything for the markets to kind of chew the fat on. So headline inflation has declined over recent months, but underlying price pressures remain strong. Lagarde said it is very clear that the ECB is not pausing. That's again a moot point, but just to make aware for any of those traders who are out there or economists thinking that the ECB might be near or is done with their hiking cycle, then that kind of puts that under the water. Later in the day, then after the ECB rate decision had occurred, you had ECB hawks, according to sources. So this is before the rate decision was made, that ECB hawks gave up on the idea of going with a 50 basis point hike without much fight. So what does that tell you? That the idea that first of all, the ECB is covering many different nations, that they need to make sure that there is equilibrium across those nations when it comes to monetary policy. Because if you do decide to set rates higher than what maybe other central banks may be able to deal with in other nations, then those nations will bring down other nations who are part of that European Union. So that's one fear that could have creeped through with the ECB hawks. There wasn't any clear indication as to why they may have given up on the 50, but if they were persuaded that they could hike for longer, with rather than hiking quickly and getting to their target range, whatever that may be, if they could hike for longer and see the effects on the economy, then that again would have been one of the other ways to persuade those hawks. Then the ECB meeting minutes on June 1st, a number of members initially expressed a preference of increasing the key ECB rate by 50 basis points. So again, the meeting minutes, if you're thinking, well, why am I seeing the same thing? The meeting minutes just takes note of what was said in the meeting, what was discussed. The statement is the final print or the final statement saying, hey, okay, this is what we've agreed on. That's it. Meeting minutes gives you more color as to what ECB members might be feeling and why they might have gone down one certain route compared to another. So most of these members indicated that they could accept the proposed increase of 25 basis points, as I did say earlier. So instead of going quick with their rate hiking cycle, they go with a more a slower path of raising rates, but a gradual way of raising rates rather than going super mega bing and then hitting the European economy harder. ECB member views is also quite important too. So you had some ECB policymakers on May 4th that saw 2 to 3 hikes ahead. That was according to sources. 10th, some ECB officials began to think the September rate hike may be required. And what happened off the back of that is actually the euro had strengthened. Now, the reason why the euro strengthened is because if you think about the next meeting that we have coming up, and if they're expecting maybe 3 more rate hikes, again, that kind of, although the reaction wasn't huge, it's still quite important to know that ECB members are thinking of maybe hiking by more than or hiking for longer than what they originally had planned to do. And we've seen that with the Federal Reserve yesterday. Okay, so when markets might have expected maybe one more rate hike by the Federal Reserve in July, then actually they put out saying, well, maybe we might need the projection is, or what Fed members are looking at is 2 additional 25 basis point rate hikes as a potential scenario. So that is also very important too. So that's why that's quite key, that if ECB members are continually raising their expectations for where the terminal rate should end up, then it means that there is potential more upside movement to the euro if more of those comments come through, and let's say if they go beyond September to raise rates particularly. ECB's Villeroy said that the ECB has already completed most of the rate hike journey. And don't forget, if you find this video useful, or if you found the Fed stream useful yesterday, don't forget to share the video, subscribe to the channel, get the word out there, and give the video a like too. But as I said, so Villeroy said the ECB has already completed most of the rate hike journey. Again, does that mean that there is 2 to 3 rate hikes ahead and that's it, we're done? Or does it mean this is the last rate hike and then they're going to pause? Well, it seems more unlikely if there is a build-up of some ECB officials looking towards September as to where they might continue raising rates. Maybe beyond that is what you naturally think of what the ECB might do, considering how the Fed have acted in the past with their rhetoric when they're in their when they're in the prime of the hiking cycle over the last year. If we carry on, so May 30th, you had ECB Simcus expecting a 25 base point rate increase in June and July. Muller said it is very likely the ECB will hike by 25 base points more than once. Of course, not giving a clarification like Simcus does, but still saying that you're more or less leaving the door open to continuation rate hikes by 25 base points. ECB also said that banks may need to set aside more funds to cover losses. So during the height of course, when we had the banking turmoil that was going on and the issues with Credit Suisse and how that was having an effect on regional banks in Europe, or could have had an even bigger domino effect on European banks. Again, that was something that the ECB itself is saying, okay, there are also these external risks that we see that maybe these regional banks, they need to be prepared. That's all they said. Is just be prepared for any further outcomes that might be negative for the European banking sector. Then let's flip to the next bit. So this little infographic here from Bloomberg in one of their articles is quite useful to understand. It shows you how influential are the members and where on the hawkish or dovish scale do they lie. So this is the last meeting for last round, and you can see that majority of the ECB members were more or less stuck on the hawkish side. And you can see that overall on that little slider there. So the idea of that changing and maybe thinking that the ECB is done with their hiking cycle doesn't really fit into where the ECB members kind of lie on this scale. Now, if we look to the next or the current expectations of what ECB members, what it looks like at the moment, so you can kind of see that some of the hawks have just moved a bit further to the hawkish side, albeit you don't really see a swing further towards the hawkish side on the scale here. Schnabel being one of the key members, Nagel, of course, of the German central bank, for the Bundesbank, again, being quite important. You don't really see a shift from anyone else. So does that mean that there is the expectation that, all right, these hawkish members in the past who would have looked for bigger rate hikes in the past and were kind of talked or had negotiated saying, okay, they will hike by 25 base points instead for longer, maybe these are the ones that are going to tip the scale and say, okay, we'll need to hike for much longer than maybe September instead, or and then see what the economic impact is. So that's one thing you could infer or imply from the shift in the scale of hawks and doves. But again, you don't really see anyone else moving that much. It's quite nice. Little dance. Okay. Then the bets and expectations then for the ECB rate decision. What are markets looking at? So UBS, they expect the ECB to deliver a 25 basis point interest rate hike in July, taking the term rate to 3.75%. Okay. And then that's on the deposit rate, by the way. Then ING, they expect the ECB to deliver a 25 basis point rate hike this week and signal more to come. And rate markets are already pricing rate markets are already priced for this outcome, and softening economic data dents ECB's ability to push rates above their 2023 top. So the economic data that we've had from Europe hasn't been great. It's like I said, what we had seen before, particularly with the manufacturing sector, not really staying in that recessionary or contraction zone, and overall data for the Eurozone isn't strong enough for the ECB to say, okay, we can go with bigger rate hikes rather than sticking with 25 basis points. If we carry on next, so here we have the ING crib sheet. Again, is very useful to kind of understand what are the potential outcomes from Lagarde and what could be said from the ECB and what could cause and how would the markets react. So you have these different base case scenarios or different scenarios that the ING has presented, and in the base case, so in regards to the inflation outlook, the comments or the headlines that could come through. That if inflation, if they keep the inflation outlook unchanged, if they say that inflation is to stay high, but in 2025 they see it getting to 2%. Growth outlook, again, the economy remain in subdued growth environment, and taking a 25 basis point hike, but being data dependent and leaving the door open to more tightening. So that's the base case scenario of what ING sees. Now, on the flip side, on the very hawkish side, if they expect inflation to be much stronger than they anticipated it to be in the past, or if they forget about saying inflation is going to reach 2% by 2025, and they just focus on that inflation is still too strong, that would provide that would be very seen as very hawkish and provide bullish sentiment for the euro to move towards the upside, and potentially could see a big move from that. Of course, if they're removing out from their current base case scenario of saying, okay, we can get inflation down to 2% by 2025. Now that's not possible, because we're going to have to raise rates for longer if we feel that inflation isn't coming down as fast as we would want it to do. That's one. Again, if they expect solid growth or strong growth within the economy, again, anything that's hawkish is considered where the economy where the economy is overheating or has potential to overheat, where the central bank will need to step in and then cool down the economy. And the flip side, on the dovish side, is where the central bank would usually try to support the economy to bring out growth, bring up consumer spending again, in hopes to keep the economy afloat. So in this case, you're looking at if they decide that, the hawkish comments or the dovish comments would be that if they decide to say that they've done their 25 basis point hike and they decide to pause at this meeting, that would of course be seen as very dovish when they're expected to do maybe a couple more hikes in the future. The quantitative tightening stuff, again, important, but maybe not as important as the inflation expectations or the rate itself, and what kind of forward guidance we get from the ECB. Although they said they would stop that, it's more or less inferred in the headlines and the text that comes through, whether or not they're going to be data dependent and keep hiking by 25, or to a 50 basis point rate hike and say that they're data dependent. But usually with the ING crib sheet, you can get kind of a mix. So you can kind of chop and change what your base case scenario would be for yourself, what you think it might be, and then put it together, and then, hey, presto, there you go. Okay, so let's carry on ahead. So this is the last rate decision that we had seen. So there was, as said, so this is 10 seconds before the last release we had seen back on March 16th. Okay, let's bring that up here and look at the deviations ready. So we can have a little look at that. Okay, so you can see the 50 basis point hike rate decision was taken. You've seen a bit of a move initially from the market. So if I just kind of skip ahead, but it didn't really last that long. it wasn't that great. Not that great. I mean, it wasn't that strong. There wasn't that strong momentum to kind of keep it up, and you can see it actually reversed. So if we kind of if we bring out the deviations here, and we can see how strong the market reaction was, and what may have caused the market reaction to be like this. So you can see here when the rate was raised. Oops, sorry. Hold on. That is an old one here. Hold on, let me get up the new one. Hold on. Apologies. Hold on. Give me 1 second, guys. All right, here we go. So, so this is about 10 seconds before the. Well, it looks to be about 10 seconds before the release happens. Kind of skip ahead. There we go. Yeah. So the rate comes in as expected. You got a 25 base point hike from the ECB, and also on the deposit rate as well. Again, still not really. There is the initial movement there, but then you can see it doesn't really last that long on the first candle. If we go skip ahead a bit more, see the Euro JPY. There is that initial move there. If we keep going more forward. So the reaction wasn't that strong from the initial reaction. It was more of a slow grind down on the euro. If we go back, and that was that there. We've got about 4 minutes left. So let's look at the deviations quickly with you guys here. So again, you can see here the market reaction wasn't that big. It was just it's quite small. And the sentiment, or what was said in the statement last time around, there was nothing new other than saying that they would discontinue APP purchases by June 2023, which was more or less as expected. No forward guidance was provided in regards to the size of another rate hike or when the hiking would end. So again, there were no surprises. So let's think of it this way. The expectation is for a 25 basis point hike today. If they surprise the markets to go with a 50 basis point hike, you'd expect significant upside movement in the euro. Or stronger movement, a significant upside movement in the euro if the ECB is expected to, kind of slow down their rate hiking path, but then they accelerate again for some reason if the hawks are able to convince them to do that. Again, that would be a surprise to the markets. As we can see here, you'd seen a reaction when there was a surprise from the ECB when they did deliver with a bigger rate hike than expected. Then you get again the expectation is thrown out the window, more volatility appears, and there's the opportunity for bigger moves. But we've also got to keep an eye on the rate statement itself. So if they do cite inflation is higher than what they'd want it to be, and there's much more work to do, then again, that's a fear. That's Canadian housing starts coming early. All right, that's out of the way with. But yeah, so you want to keep an eye on not just the figure itself, whether they do surprise the markets, but also the statement that comes through. Are they more hawkish, or do they kind of remain hawkish and dovish, where they're more or less neutral and you don't really get that much of a reaction? Okay, so we got 1 minute remaining till the release. Again, as said, if you get a mixed bunch of headlines where there isn't a clear direction of hawkish or dovish comments, then again you get a mixed response from the markets, and it might not be you might not get that much volatility if it's more or less boring or the same. Okay, right, we have about 30 seconds to go. What I'm going to do is also going to go through the headlines as well to kind of discuss what might have caused the market to move in a certain way, if there was or if there is a market reaction at all from it. Yes, and good luck everyone. Hello, Patliano. Good to see you again. Good luck everyone. Okay, about 10 seconds. Hike, 25 base point hike, 25 base point hike as expected on the ECB interest rate. Deposit rate hike, 25 base point hike, 25 base point hike as expected. And also the ECB coming through. Right. All right. Let's have a look, go through this. Okay, so nothing really interesting came out from the ECB, other than just updating their expectation where they see inflation at 2.3% in by 2025 rather than 2%. But again, it's a lot of a mix of hawkish and dovish comments talking about lowering the economic growth projections, but then also seeing inflation as remaining too high for too long. Yeah, if we also look here again, nothing that's really out of the blue. So let's have a quick measure of the markets here and see what we've got. So this is the Bunds, Euro Bunds. We've got Bunds here, 23 ticks, meh. So not really a lot happened there. Let's see what the euro dollar did. Okay, again, it's more of a dud. Release here from the ECB. There wasn't anything surprising or anything that kind of shocked the markets. More or less everything was in line with expectation. Let's go to 16. Let's see what we happened. Let's see what we did here. The DAX about 22 ticks down to euro dollar 16 pips up. Let's look at euro JPY. So no surprises like the Fed, basically, which is what you would have hoped, maybe have hoped to have seen, which would have given the euro a positive boost if they decided to. Okay. Okay, so there's another key headline to be aware of too. So November 2023 ECB ESTR forward at 3.8% compared to 3.77% before the ECB rate statement. So that did provide a little bit of movement towards the upside on, of course, the euro and the expectations for future rate hikes. But other than that, it was, yes, there was a reaction, but it wasn't as big as maybe one would have wanted to see. So, FinancialJuice, where we get the live voice and text service. If you've never come across a live voice and text service before, all you got to understand is the big boys use a service like use a live voice and text service to manage their risks, to understand what's going on in the markets or what's going on in the headlines, if there is something that's going on in the headlines that's causing risk, and two, to capitalize then on that potential risk that they see. And to capitalize on what they see in the markets from the headlines and maybe go to other areas that they might not have already thought of if they were kind of focused on one area. So again, a live voice and text service is something that we got retail sales as well coming up in about 5 minutes. But again, so a live voice and text service is something that day traders, particularly day traders, generally, it adds another tool to your arsenal because you understand what's moving the markets there and then. That's what FinancialJuice does. It provides you with real-time voice and text news about what's going in the markets now and why is it happening. And then also giving you live economic data here in our calendar here on the left-hand side that you can see here. As I said, we've got your voice feed here in the center, or the voice feed here in the top right-hand side. And then you have your voice, you have your text news feed here going down the center. And of course, again, see like key headlines. So some headlines like this were Japan's PM Kishida telling party executives he doesn't plan to dissolve parliament during the current diet session, albeit it wasn't a huge reaction, but it did cause a bit of movement on the dollar yen. With a little bit of a flashback, kind of zoom out. No. But yeah, so there you go. So again, keeping you up to date with what's moving the markets in live, real time with voice and text. So what you can do is you can, we have an offer for Lifetime Pro for $997. Lifetime Pro with a lifetime money back guarantee of Financial Juice. If I just go grab the link here for you, and I'll put it in the chat here. Bing. Actually, this is to the Pro version. That should work there. There you go. So that's the link to the lifetime version of FinancialJuice Pro. As said, we have you guys have till Sunday to sign up to that. If you don't have a FinancialJuice account already, and you want to sign up to the Pro version, that's totally down to you. But make sure you do have an account on FinancialJuice first with a login and username, and you've gone to your email to verify your account. Then make your purchase. Once you've made your purchase, log out and then log back in again, and then you'll experience a real-time version of FinancialJuice. The link is broken. Which link are you clicking on? The second link. That should work. You should be saying. What you could do then is you could click on. I'll pin this link actually. The link at the top, the link that is now pinned. So that will take you to the FinancialJuice site itself, and then you can have a look, and then you can click on the button which would say Go Pro, where this logo is at the moment, and then you can decide and choose what your subscription will be. But if that okay, all right. I'll have a little check on that with that link, why it's broken. But yeah, so that's the FinancialJuice Pro version. Again, if you're not ready to go with the Pro version, have a little play with it. You have the live version. If you're not used to using a live voice and text service, keep playing with it. See what kind of works for you. And also, if you like the video, don't forget to, and if you've enjoyed the content and you found it useful, don't forget to like the video, subscribe to the channel, get the word out there, share it with your fellow traders and friends. And then again, and hopefully we can continue to provide you with a great service. Now, the deviations for the economic release is what I'd shown you. We've got about a minute left till the retail sales. Let me bring up the S&P just in case something does happen. Retail sales. That's not expected, by the way, for us to cover retail sales. But hey-oh, you never know what could happen. So MacroAce, the mailing list, again, the deviations that I showed you on the earlier on in the stream, showing you how the markets react to economic releases. That's completely free, and I send that out every Monday. I've got about 10 seconds to the retail sales. Send that out every Monday till for you guys with short paragraphs of. Okay, so 0.3% higher than the forecast of minus 0.2% for retail sales month to month. It's waiting on initial jobs claims. Okay, there you go. 262 higher than the forecast of 245 for initial jobs claims, and yay, S&P did see a little bit of a jump there. For the back of the initial jobless claims figure. All right, let's finish this stream before we have the Bank of England next week. So, as I was saying with the MacroAce main list, I put out an email every Monday of what to expect in the Europe, Asia session and the US session with a summary of the weekend news and the deviations for the upcoming week ahead and the live streams. Now, of course, you might be thinking, well, are there going to be charts or graphs or line graphs in there? No, it's short and simple. Just a quick review of what to expect for the week ahead. A little quick zip review, and then in the streams is where I go into more detail about the upcoming economic releases that we have, and hopefully then you garner good information or great information from that. Anyways, ladies and gents, thank you very much for joining me live for MacroAce. enjoy the rest of your trading session. That is it for MacroAce for this week. There's nothing else that we're going to be covering. Next week is the Bank of England, and we so it's going to be quite important next week for us to keep an eye on what their expectations are. What are they going to be doing with their rate decision? So join me live for that. Again, sign up for the MacroAce main list. I'll put the link here for you. Again, completely free, no charge. If you find the information useful, then do give us a shout out. Do provide us with feedback as well. And you can do that at tony@financialjuice.com. So I'll put that link there for you here as well. All right. Thank you very much for joining me. Take care, and I'll see you guys next time.